Hello guys, Kevin's here, State and Co Truck Insurance. In today's video, I'll talk about one thing that every trucker, and no matter if you've been in business 2 months or 20 years, but you can do this one thing that's gonna help you save thousands and in some cases probably tens of thousands of dollars when it comes to your trucking business. And that one thing is no other than a credit FICO score. We all know how important it is to have good credit score, and it pretty much affects you in everyday life from, applying credit cards, car loans, mortgages, getting a job. But when it comes to running your trucking business, it's probably even more important because there are a couple factors that are based on your credit score. So first of all, the price of the insurance depends partially on the owner's credit score. And I've seen price differences can be for one truck in tens of thousands of dollars. Presuming somebody who's starting a new venture and has an excellent credit score might be getting a quote in, let's say, North Carolina, $18,000 per year, versus somebody who's got a bad credit score below 600. They're probably going to be in the tune of $40,000 per year. And it's because most of the truck insurance companies, they do what is called a soft credit inquiry on the owner's credit history. They do not need your social. They're just based it off your name, address, date of birth, and they can have a limited view of your credit history and your credit score. And it has direct effect on your truck insurance prices. And the second most important factor, it comes when you're getting your equipment financed. You're buying a truck, trailer, the rates, if you have a score over 700, you'll probably be seeing rates in that 6, 7, 8% range. If you have a score below 540, below 600, you'll probably end up seeing 17, 18, 20% rates. And again, over a 5 or a 4-year term, that's going to equate in thousands and tens of thousands of dollars. So what can you do to help to build and get your score improved? There are a couple things, and I'm just going to go over. I highlighted several of the important aspects of building and improving your credit score. So first of all, what does FICO credit score consists of? What makes it up that 500 up to 900 credit score range? And the number one factor is the payment history. It's 35% weight to overall equation of your FICO score, composite score. The amounts that you owe, the outstanding balances versus to available credit. So those would be, if you have a $10,000 credit card, that's the limit, but your outstanding balance is $8,000, which is almost maxed out. That has impact of 30%. The length of credit history. The longer you have your credit history, the better it is, but it's on about 15% weight to the equation. New credit. Every time you apply for a new credit, it does have an impact on your credit score. Sometimes it takes points off because you're actually opening a new credit line, and I'll talk more about that down the road. But that's about 10% of the significance. And the credit mix, which is combination of mortgage, car loan, credit card, college debt, that's 10%. So first things first, what everybody should do is you have to know what's on your credit report. There are 3 credit bureaus in the United States: TransUnion, Equifax, and Experian. And you can request your free annual credit report through annualcreditreports.com. That's where you can pull your report at no cost. And there is a link below this video where you can request that free annual credit report. And again, make sure the report is accurate. Make sure that the credit lines that you have available, they're yours. Make sure that the payment history that gets reported is yours, because many clients have been telling us that occasionally people have discrepancies. There's sometimes wrong information reported. It might be accurate on one bureau, but might show, completely wrong information on other bureau. And as you see in the slide, there is a link to where you can get educated through Consumer Financial Protection Bureau on how to request to fix errors in your credit report. So, make sure it's all accurate, and this is really your credit history. It's not mixed up with somebody else's. The second thing that's pretty important would be make sure that you pay down any credit card debt first that you have. So credit card debt will have, and especially if you're almost maxed out, that's going to have a big negative effect. As you saw, the available credit, I mean, it's 30% of that credit score. And a good rule of thumb is to keep outstanding balances below 30% of your available balances. So for example, if your credit cards, let's say you have 3 credit cards and the total is $10,000 limit for all 3 cards, the outstanding balances should be under $3,000. So that's kind of good rule of thumb to follow. Next, make sure you get a credit card. If you don't have one, just get one, because it does help to build your credit score, and there's nothing better and faster to build your credit score is when you have a credit card and you're making those payments on time. Again, if you don't qualify for unsecured credit card, just get one that's cash secured. So my 18-year-old daughter, we tried to get her a credit card. She applied, she got declined by multiple banks, but then she tried Capital One and she got a $300 cash secured credit card. Yes, we have to put $300 to secure that card, but it starts building her credit history. It's going to help her down the road. The next, consider signing up for Experience Boost. It's one of the newer features that the Experience Credit Bureau has, to where it's going to help to build your credit by reporting your utility bill payments, phone payments, because typically utilities, phone bill payments, cable payments, that is not part of the equation when it comes to your payment history. All credit bureaus, they only take in consideration your payment history on the debt that you have. So those would be car loans, mortgages, personal loans, college loans. But Experience has this program where when you enroll, it's going to count your utility bill payments, your cell phone payments, cable payments, and it's not going to be a huge lift, but it's going to add another maybe 10, 15 points to your credit score. So please make sure you sign up for this program, which by the way is free. The next, make sure that the negative items, and again, in this one, you can't fast forward. I mean, it is what it is. If you have those bankruptcies, repossessions, late payments, it takes time for those to fall off. And like Chapter 7 bankruptcy, it's gonna fall off after 10 years. Chapter 13, 7 years. Collection accounts, those are 7 years. Late payments, 7 years. And hard inquiries, meaning when you're applying for credit, providing social number, and somebody's pulling your credit history, that's what it's called, hard inquiry. And again, not to be confused with the soft inquiry, which is when you're applying and shopping for a truck insurance. And yes, most insurance companies will do that soft credit inquiry without using your social, and that does not affect your credit score in any negative way, shape, or form. Number 6, apply for new credit, and when you apply for a new credit, have a plan. Don't just go and apply for 3, 4 credit cards at once. Don't just jump into, when you're shopping for a car loan, apply with 4 or 5 different lenders, because the more of a hard inquiries, hard applications you have on your credit history, each one of those takes points off your credit score. And the logic behind that is that when you're applying for credit, the credit bureaus know and understand that yes, you are going to be getting new credit. So it is kind of ding, but then once you get it credit and start making those payments, it will help you to get that score back up again. So again, generating hard inquiries too often, too many, it's going to be a big negative impact. And also it reduces the average age of your accounts. So let's say your first credit line, your credit card you received was 2 years ago, and if you got 3 more credit cards since then it's just going to reduce your average time length of all those accounts, which is again, it's not a huge negative, but it will have some negative impact on your overall FICO score. And again, that just, when you're putting too many inquiries, it just tells lenders that yes, you're shopping for, a loan, there's going to be debt, might even look desperate. So, try to limit, if you're shopping for a car loan, maybe 1-2 lenders, credit card, 1-2, maybe 3 credit card providers, no more than that. And the last one, number 7, which is again the most important, and as you saw in the first slide, the payment history is 35% of your credit score. So making those payments on time, and even if let's say you have a credit card bill, the minimum payment is $250. If you can make only $100 payment, make that $100 payment. Don't just skip that payment, because that $100 partial payment will still be posted as payment. So do yourself a favor, make those payments on time, and that's going to help you to build and maintain your credit score down the road. And that is it for today. So please do not forget to hit that subscribe button. Stay tuned, and we'll see you next time. Bye.